Listen to me, because this is your hard-earned money we are talking about, and I do not want you to lose 1 cent of it to Uncle Sam simply because you didn't know the rules. You have spent years, maybe decades, disciplined and focused, putting money into your IRA so that one day you could have a secure retirement. But life happens, doesn't it? Maybe you're facing a medical crisis, or you're looking at your retirement accounts and thinking, I need that money now, but I'm only 54. The fear is real. You've heard about that 10% early withdrawal penalty, and it feels like a wall standing between you and your own cash. If you take out $50,000 before you are 59 and a half, you are handing $5,000 directly to the IRS before you even pay your regular income taxes. That is a travesty. It is a leak in your financial bucket that we are going to plug right now. I want you to ask yourself, is this an emergency, or is there a way to qualify for an exception? Because the IRS actually provides several get-out-of-jail-free cards if you know how to play them. The biggest one, and the one that saves so many people, is the Rule of 55, but be careful, that's for your 401k. For your IRA, we have to look at specific life events. Are you dealing with unreimbursed medical expenses? If those expenses exceed 7.5% of your adjusted gross income, you can take money out of your IRA to pay them without that 10% penalty. This isn't about buying a new car, this is about your health and your survival. What about health insurance premiums while you're unemployed? If you've received unemployment compensation for 12 consecutive weeks, you can use IRA distributions to pay for those premiums. You have to protect your health to protect your wealth. Maybe you aren't the one in trouble. Maybe you want to help a child or grandchild with higher education. You can take a distribution for qualified higher education expenses, tuition, fees, books, and the 10% penalty is waived. Or perhaps you are finally ready to buy that first home. The IRS allows you to take up to $10,000 out of your IRA for a first-time home purchase. And listen to me, first time doesn't always mean you've never owned a home. If you haven't owned one in the last 2 years, you may qualify. But what if you just need the income? What if you retired early and you need a steady stream of cash before you hit 59 and a half? There is a powerhouse move called Rule 72T. These are substantially equal periodic payments. You committed to taking a specific amount of money out every single year for 5 years or until you hit 59 and a half, whichever is longer. It is a commitment, and you cannot break it, or the penalties come back to haunt you. But if done correctly, it unlocks your IRA years early. The actionable takeaway here is simple: do not just call your bank and ask for a check. If you do that, they will withhold taxes and the penalty will be triggered. You must document your exception. You must fill out Form 5329 when you file your taxes to tell the IRS exactly why you don't owe that 10%. You have worked too hard to be powerless. Stand in your truth, know the law, and keep your money where it belongs, with you.